The expiration of the petrodollar agreement between the United States and Saudi Arabia marks a significant shift in the global financial landscape. This development has far-reaching implications, especially for the US dollar, Bitcoin, and gold. The term petrodollar originated in the early 1970s following an agreement between the US and Saudi Arabia. In this deal, Saudi Arabia agreed to price its oil exclusively in USD and invest its surplus oil revenues in US Treasury bonds. In return, the US provided military support to the kingdom. This agreement solidified the USD's position as the world's reserve currency, creating economic prosperity for the US by attracting foreign investments and keeping interest rates low. However, the global energy landscape is changing. The rise of renewable energy and natural gas has reduced dependency on oil, even in oil-rich nations like Saudi Arabia. The kingdom aims to generate half of its electricity from renewables and natural gas by 2030 and reach net zero emissions by 2060. Additionally, new oil-producing nations like Brazil and Canada have emerged, challenging the Middle East's dominance. Saudi Arabia's recent acceptance into the BRICS bloc signifies its intention to diversify its economic relationships beyond the US. This move, coupled with the increasing shift towards local currencies and energy trade, poses a potential threat to the USD's dominance in global markets. While some analysts believe the USD will retain its reserve currency status in the short term, the long-term effects could be significant. If Saudi Arabia starts accepting other currencies for oil, it could weaken the USD, leading to higher inflation and interest rates in the US. Currently, nearly 80% of global oil sales are priced in dollars, but this could change as major economies like China push for alternative currencies. The end of the petrodollar agreement could positively impact Bitcoin and gold. As countries diversify their assets away from the USD, Bitcoin and gold could see increased demand. Bitcoin, in particular, offers a decentralized alternative that is gaining traction in a digital global economy. Its ties to energy companies through its proof-of-work consensus mechanism makes it a relevant asset in the evolving energy market. Gold, traditionally a safe haven asset, could also benefit from the shift. A potential BRICS currency backed by a basket of commodities, including gold, could drive up gold prices. With Saudi Arabia and other nations moving away from the petrodollar system, the demand for gold in trade settlements might increase. This shift presents an opportunity for Bitcoin and gold to play more prominent roles as alternative assets in the new financial order. As nations diversify their economic strategies, both Bitcoin and gold could see significant gains, heralding a promising future for these assets. Subscribe, play hard, trade smart. This is the Crypto Realm.